there's some there were some other blocks. There were some other blocks you like presented that at first I wasn't seeing them. Like the ones on the was it weekly and monthly? Was
Yes.
kind of So
Mm-hmm.
those are things that I know other blocks, but to figure out because I was not using them. I just
Yeah.
knew that this is what another block is. I was still learning internal and external range, but I don't know when and where to use it. You see all those kind of stuff.
Yeah, okay. Okay. Now,
And then for that, for the monthly assignment you gave me to check every 3 months, it's not like something consistent.
well, what do you
Like
mean?
there's
It's
a
not like something consistent.
like it's not every 3 months that there is a change in like the direction of the market. From what I
Yes.
noticed,
Yes.
yeah. So that's my own point of view.
Okay.
Maybe I was seeing it wrongly.
On which specific currency pair did you check that?
I told you I'll just follow you, and we're using just a USD JPY, right?
Okay.
Hmm. I'll have to be good, like really good first before trying to like go to the other
Oh,
pairs
oh,
and
another pairs. Yeah, I think that's a good thing. That's a good way for you to go about it first. So, checking on something. Okay. Like, okay. Now, how do you say that okay, listen, when you observe like for every quarter of the year, right?
mm-hmm.
It's not obligated that there's literally going to be a shift. I don't know if you understand, but the market will be doing one thing within 3 months or within some specific duration. Now, either the market
Okay.
will be either selling, or the market will be buying, or the market will be consolidating, or the market will be expanding. Now, it depends. Now, let's go on a higher time frame together. So, I don't want us to just keep moving ahead without us going through our last session so that you should understand it very well.
Normally.
Okay. So take for instance, right?
Mm-hmm.
This is on a monthly time frame. This is the monthly time frame, right?
Yeah, yeah.
Now observe these. The market was doing this buying. 1, 2, 3, right? This is the fourth,
Mm-hmm.
this is the fourth month. Now the
Yes.
market was buying October, November, December.
Mm-hmm.
Now, even though we have this bearish candle in between, it doesn't mean that the market was bearish. The trend was overall bullish. I don't know if you understand now.
No, I'm getting it. I'm getting it right.
Exactly. Now, before October, before November, before October, what was happening? We had what? We had July, August, September. That was the bearish month. That was the bearish quarter.
Yeah.
You see, from
Yeah.
July, August, September. Now, before July, August, September, what did we have? We have what? We had the uh June, May,
April.
April. Now, before even April, look at where the bullish movement started even. Boom. The bullish movement was aggressive. So we had a buying season of like let's say January, February, March, April, May, June.
6 months.
6 month buying. Now within those 6 months, we had what 3 months of bearishness and 3 months of bullishness in between for the remaining 6 months.
Mm-hmm.
So even if on this first month, right, let's say hypothetically speaking, even if you want to do this concept and you go wrong once in a while, right? Even if you wanted to be wrong, look at these first candles from January. January was bullish for the first 3 months, right? Even if you are looking for a next maybe switch in the market for the market maybe to sell or to consolidate, let's say January, February, March, January, February, March, right? Let's say you were looking for something between April, May, and June. You were not successful. But June, but July, August, September, you had your bread and butter setup, and October, November, December. You see, so you had in 4 quarters per year, you were wrong 1 quarter, but you were profitable 3 quarters.
I get it.
So, like I was saying, now this market has been on an uptrend for a very long period of time, knowing fully well what controls market, which is institution, order flow, and liquidity. This market is at its premium, where there is a huge possibility for an aggressive crash in this market because it has been building, it has been or it is on an uptrend. Because this has been a very long ride. Look at the monthly time frame, like look at it has been on a very bullish uptrend since 2021. It's been buying. So we could see some little retracement. Now, when you go, this is the monthly time frame, right?
Yes.
Understanding now that we are in January and we always have a quarterly shift in the market every single time. What I would like to observe, or when I go to the lower time frame, I want to look what the lower time frame is giving us, right? Now let's not even go to the lower time frame. I don't even want us to like do. Let's just do practicals today, and these practicals perhaps will help you in a lot of ways. Let's say I go. This is the monthly time frame. Now you remember this one that I say like January, February, March, right? This one that I said that could be a losing quarter for you. That is the second quarter of this year could have been a losing quarter for you. Now, just because, like I was saying, before I come in here, just because we have that ideology that we have a shift in market structure or the market is doing one or two things every quarter of the year, it doesn't mean that if the market is on the bullish trend, we should be looking for sell orders automatically. No, we need to look for patterns that give us maybe a market reversal or a wyckoff or a run in liquidity or a run in buy stuff, something like that will give us a signal that the market is about to switch gear. So we should not just exit the market in a random way, like amateurs.
Yeah.
So one of the reasons why I think this market will sell is when you go, let's say like you break it down, you go to the weekly time frame now, you'll see that we are on a weekly bullish order block. But look at the body of this weekly candlestick. In as long as the wick goes up, the opening price open, it goes above and it comes back and close. Look at the body of this candlestick. We are on a weekly time frame, right? But look at the body
Yeah.
of this candlestick. Look at how they are playing. Now we're on a
Can you
week.
show me the other block, the bullish other block you were talking
This is
about?
the weekly bullish order block here.
Okay.
Now this week has just opened. We are in Monday, but this week has just opened and it has dropped into the weekly order block. Now, inside this weekly order block, if we go on the 4-hour time frame, you see that inside this weekly order block, we are on the bullish trend inside this weekly order block. Let me box it with a rectangle. Let's box this area so that you see. Inside this weekly bullish order block, if you go now to the 4-hour, you see that we have been on a bullish uptrend inside this weekly order all over. We have been on a weekly bullish order block inside. Excuse me. I just missed something right now that is gonna piss me off for real.
The trade?
Yes, this is a sell signal. This is our sell signal. That's why I just missed something that is gonna piss me off for real, man. That I need to look for a way to enter in this trade because this market is not gonna let me out. It is not gonna leave me out. I don't care what is going to happen, but it's not going. This market is going to be really bearish, really bearish. Look at this point because it's boiling down to what I want to explain to you today. And I think I will cut my losses short, and I look for a sell position because, man, Let me just see what this market needs to do now. Give me 1 minute there.
All right, it's no problem.
Okay. Yeah, so you will see that you will see how interesting this is, right? Now on the overall higher time frame, we're on a bullish trend, but then like I was saying, just because we're on a bullish trend, it doesn't mean we should buy a market at a premium because we think that it will reverse automatically. I mean, we should sell a market on a premium because we think it will sell automatically, or we should buy a market at a discount because we think it will automatically start buying. Because sometimes at a discount, the market can still keep collapsing aggressively. Now, inside this uptrend, like I was saying, what was the market doing here? The market was finding support here. Every time the bounce here, it goes back up, it goes back up, right? But now what happened is, look at how we box this area. The market had these highs and lows was the range. This was the range that the market was trading in. It was hitting here, 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 right? Now, when the market is trading in a range, right? I want you to pay attention, and I'm recording this because I'm going to send it to you. When the market is trading in a range, the first move out of that range is the fake move. I don't know if you understand.
Yes.
As it's moving like this first move, as it bought is out like this, that is the fake move. It bought out of this range to take out the buy side liquidity and to accumulate more buy order for people that will chase the market and thinking this market is going to keep buying, to do the reverse and collapse and seek out for this sell side liquidity that's sitting below this area. And it might find now some support on this bullish 4-hour bullish order block when he has already taken out all of this liquidity. That's why I was like, when I saw the trade, I was like, I just made something that will piss me off. Because today, this would have been a perfect entry for me here on this 4-hour bearish order block without any drawdown. So that if this market is collapsing, now if since you are looking for a sell opportunity, because this first move out of this area is the fake move, let me even blow your mind more. Let's go to the daily time frame and you see something even clearer. On a daily time frame, you see this is the range. On the daily time frame, what happened on Friday's candle? Friday's candle bought and go wide up into the buy stop that were written on the previous daily candle. So it ran out, it bought into this previous daily high, sit into these previous. That's why I said the previous data are very important. When you are trading, when you're looking for your trade setup, take previous data as point of reference because that is where the liquidity is residing, and that is where the market will either gain bullish or bearish momentum or seek for liquidity within those areas. Look for previous data for your entry and previous data for your exits. So these previous daily order block, look at how when the market bought into this area, let's put a horizontal line here. On this daily order block, when the market bought into it, look at the wick of this daily candlestick. The body of the candlestick never crosses this line, this horizontal line that I just put. Every time it comes above, it rejects, which means the bear are slowly taking control of this market, right? Now,
Yes.
I know there's a question you're going to ask me. Right now, this market is on a bullish order block, right? That is you never asked me the question, but I'll ask you. When the market is switching gear, you remember what I told you? The bullish order block will fail and the bearish order blocks will be respected
Holding. Yeah.
because they are seeking for sell side liquidity now. So this bullish order block will not be respected. Those who are trading now bullish order block, they'll be buying this market like retail traders without having the overall directional bias. Then their stop will be somewhere below this area. Now we will be buying their stop. So their stop loss will be our take profit. So when these, see now, a lot of people be trading this market because on the other block, but no, they didn't come above to see what the market did prior to this movement. Now, when we go now to the 4-hour time frame, you see that look at how look at the bodies of this 4-hour candlestick. Look at what is happening. It's coming, it's buying, but it's rejecting. It's showing that the bear are slowly taking control of these markets slowly. So, and not only is showing that after that rejection, look at our trading range, look at this range got the fake move out. That's the second confirmation that we should be looking for more sell opportunities than buy opportunities. Now, let me even blow your mind. If we go on a 1-hour time frame, look at how you refine your trade entry. On a 1-hour time frame, look at this. This is a swing. Bearish order flow. A swing. Look at this last 1-hour candles. Look at the way it bought into these bearish order block. After taking out these buy stop and sell stop, the buy stop that I said above, but look at how it rejected. Look at the bodies of this candlestick. Now, this is a swing, giving you a third confirmation on the lower time frames in order to help you minimize your risk that this market is about to go lower. Now, we are on 1-hour time frame. Any buying opportunity inside this 1-hour bearish order block should be your entry. Now, if you're buying these areas, like if this market move like this, let me take like what, a brush. Any buy like this into this area is your bearish, is your bearish setup. And when you're selling, your target is below. Let me zoom that out. Exactly. This is your target here, below. Now, if you want to calculate that alone, see something. You're heading for at least, look at, that is 200 pip, 350 pip for what? For maybe 30, for maybe 30 pip stop loss. That is like a 1:8 or 9 risk to reward setup. Now, these are not setup that you see every single day because they don't form every single time. Now, if you want to spread your stop, you can increase your stop above for like 50 pips to give the market room to breathe. So that the market can still buy above, the market can do some market manipulation and stuff like that, but you don't want to get caught up, get out of the trade and miss the opportunity. So you can open yourself for some risk. Because if this market breaks this high and come above this area, trust me, there's a possibility that the market will keep buying above. But now, when we go now to our economic calendar Forex factoring.
Also, I don't have a good habit of always checking his stuff, and it always costs me a lot.
Yeah, we should always check it because the news is right. The news is here help you to be on the chart to watch how volatile the market will be at a specific time. Okay, now look at tomorrow. This is Tuesday, 14 January, right? We have a news at 2:30 p.m. This is my time. I don't know what time it will be over there, so you should check it. It automatically adapts to a specific local area time. So 2:30 my own WAP USD news, which means this USD news might help push this market towards our direction easily on Tuesday. So I'm going to give you this as an assignment too, to just keep your eye on this trade and we will see how this trade will deliver. Because me personally, I'm entering this trade now, I want to sell, but this will be my target on this trade. I can decide to minimize my risks like that, right? Yes, let's do this, right? So that even if my stop loss get hit here, I have a second chance to still re-enter this trade here with the same lot so that if the market starts selling back to my initial first trade, I have already recovered the loss that I made from this market buying from my stop loss. I don't know if you understand.
I'm getting.
So if I put my stop loss here and I get kicked out by market volatility, I should be able to re-enter a trade with the same mindset that the market is still going to sell and put my stop loss maybe here. Then why the market will be collapsing, the way my stop loss was on the onset, before the market collapsed back to my previous entry price, I would have already made back the losses that I made from the previous trade. And if it keeps going above, it goes towards my direction and to my advantage. Now, if we put our stop loss here, it means you'll be risking what? 50 pip for almost 300 pip.
Hmm.
That is a 1:6 risk to reward. And now, though it's a 1:6 risk to reward, remember, I'm an intraday trader. That's why I'm looking from the higher time frame to the lower time frame. And I can hold my trade for days before it delivers to this area. It doesn't mean that because we have news tomorrow, it should deliver ASAP like boom. Tomorrow can sell, it finds support here, building more buy order, retrace a little bit on Tuesday again. Then Wednesday it sells again. Then Thursday it sells and it sells. I don't even understand.
Yeah.
Because I am an intraday trader and I'll hold my trade for a long, for a while, I can enter this trade like this and hold it for a week. Now let me ask you a question. Would you prefer to hold a trade like this once a week that can give you a reward, a risk to reward like 1:5 or 1:6 risk to reward, or you want to be in the market every single day and trading?
I cannot even be in the market every single day and trading.
Now you
I
see
used to
that,
adopt more.
now you see
I used to
that,
adopt.
yeah,
Are
go
you
ahead.
getting me?
Yes.
Oh, so I used to adopt for a long time now. I've been adopting swing like 1 week, two weeks.
Now you
Yeah,
see
if you take a
that
trade and you
not
hold it
only
for
not
like
only is this nice, not only is this nice, but it's giving you the room for you to be able to do other things. And not only is it giving you the room for you to be able to do other things, it is helping you see the way market unfold on a higher time frame that happens slower and gives you the time to see it compared to you focusing on the lower time frame where you don't even know yet what you're doing on a higher time frame. Because remember what I told you, every single thing that happens on a higher time frame repeat itself on the lower time frame, but just a little faster.
mm,
So there is a huge possibility that you might still see this movement on the lower time. Let's say if you're trading on the 1 minute, you can still see this on the 1 minute, but you need to be able to execute real quick because it happens real fast, like in 1 hour, you can see the same graph, but it delivers within that 1 hour because you are trading off of the 1 minute time frame and your higher time frame directional bias, which is what the 1 hour. So you understand? So
yeah.
on the contrary, us now, we have a higher time frame. We have now a bigger picture of where we should be looking for trade setup for this entire week, which is for sell setup only. I hope you're following up.
I'm following up.
Okay. On va commencer concentré.
You feel comment?
Yeah. No, j'aime bien. I like the fact you're following up. So now let's go back to why I was explaining you all this. I was explaining you all this because we are, like I was saying, we are on a weekly bullish order block. Meanwhile, other people would have just been looking for what? They would have just been looking for bullish trade because people that are trading order blocks and people that are trading order block, but they don't have inside information like what I'm telling you right now. They will just be trading order block because they say, no, the market is on a weekly bullish order block and the market is going to buy above from this area. But now you see the way
So
we have, pardon?
no, finish up before I speak.
Now you see the way we are on a weekly bullish order block, but we see that on the lower time frame we will have more sell side liquidity than buy side liquidity because we have refined our trade to the low from the top down analysis from the higher time frame to the low, from the week, from the monthly to the weekly to the daily to the 4 hour to the 1 hour that have given us multiple confirmation on the lower time frame that this market is about to go lower. Though we have just one confirmation on a higher time frame that this market should go bullish, which is on the weekly time frame that we are on a weekly order block, but we'll have more than 3 to 4 confirmation on the lower time frame that shows us that the market is about to go lower. Because at the end of the day, what controls the market after all is liquidity.
Sure. But like what I wanted to say is even those other blogs, I'm not sure if I was by myself, if I was looking at YouTube videos, I would have been able to see it. Like
Yeah, you will
it's just
you will not see it the way that you might see it, right, but maybe you would not understand it detailedly like I'm explaining it to you now.
yeah, I'm telling you that me, I wouldn't have even seen. You're getting, I wouldn't have even seen it the way you're showing it. And then I have this like sometimes I ask questions about like it will go from down here. No, like we'll go back to the weekly.
Okay.
Like this stuff, I have to take time before really understanding everything. So this last candle
This one,
before the no before the bearish movement started,
yeah,
before the bullish Otampuma,
yeah.
yeah, that bullish candle, yeah,
Yeah, this is the bullish order block here.
yeah. So after that, there's another red candle
This
after that
red,
again.
let me explain something to you, right?
All
Okay.
right.
It's a good question. And like I said, don't be shy to ask any question, yeah. Parce que tu es en train de payer pour ta formation, donc en profite, mon frère. So let me tell you something. Look at the body of this last bearish candlestick. This we take this one and we don't count this one because this one is a return into this weekly bullish order block to gain more bullish momentum to buy above. Okay, so that's why we don't take this red one. We take this last bullish candle before this engulfing, this last bearish candle before this engulfing candlestick came in, right? Now, we are on a weekly time frame. I've not gone on the lower time frame to see what's happening now, but look at how. Regarde comment je vais te décortiquer ça.
Hmm.
Now, you take your rectangle so that we're unboxing this so that you should see. We're unboxing the candle of this weekly bearish candlestick, okay?
Yeah.
Unboxing the body, not the wick. I don't think the wick. I'm boxing the body. Because I don't box the wick. Why? Because wicks varies based off of different brokers that increase spreads.
Mm-hmm.
So I can have a wicket that extends just 2 pips, and on another broker it extends more than 5 pips. So we don't take wicks, we take just the bodies, okay? So now I box that. This is it. I box it here, right? Now, when you box a bullish order block like this, when you want to look for a trade, whenever the market comes back into that, at least, in fact, maximum 50% of this weekly order block, right? That is your buy confirmation, and your stop loss should be the low that the weekly or the low that the order block created, be it on the weekly or the daily or on the 1 hour. It depends on which time frame you're looking the order block. Okay,
Okay.
so this is the weekly time frame. This is the weekly bullish order block. Now you go to say the daily now. Now look at what happened. It was the weekly order block, right? Look at the bodies, how the body played out. Look at this. On the weekly order block, we also had this weekly bullish order block here. Look at the next day, the market bought into this weekly order block, engulfing these two bearish candlestick. Now, since this one bullish candlestick was very long that it engulfed these two bearish candlestick, it makes these two bearish candlestick become one bullish order block.
Mm-hmm.
Now, the next day, what happened? Look at the next day, the market opened on this daily candlestick, right? Look at how the market sell into these last or into this bullish order block. Now, like I was saying, if you're buying or if you're on an order block, right? Be it bullish or bearish, when you are trading an order block, if you're buying the low that order block form should be where your stop loss should be at, not further than that. Now look at the way the next day the market sell into this area, but it didn't reach this low. And ever since the market bought aggressively, it never returned to this low. Now I've left from the higher time frame. Now I left from the weekly. Now we are on a daily. But now look at how the weekly has confirmed. The weekly was our bullish weekly order block. The daily confirmed the weekly bullish order block, aligning itself again with the daily order block. Now, don't forget that this is our rectangle of the weekly order block. Now, on this weekly order block, we'll take our Fibonacci. I will place our Fibonacci. We'll use this rectangle because this rectangle described is the body of the weekly candlestick. So we don't need to go back to the weekly candlestick to see this. So you take from this low to the, oh, I've not set up my Fibonacci. I want to set it up. It will start taking longer than,
Yeah, I even wanted you to set it up so I could see and use the same thing.
okay. Setting.
But you should have saved the template of it, right?
I don't even need to save it. Like this is the way I'm just doing it. I need 0. I need 1. I don't need these. I don't need these. No, I need 0. Do I need these? I don't need these. No, I need you. I don't need you. Think. I need you. No, no, I need you, but I don't need you. Okay. Okay. I don't need this background color stuff. It's disturbing me. Boom. Oh, I'm not yet done setting it still. I don't like those colors.
You have to set every color.
Not really.
Use one color.
I just want to see the visibility, coordinate.
For the color, you have to use color.
Yeah, I know. But I just want to see something else. I'm trying to modify something else before that is level.
Tu veux retirer quoi en fait?
These ones below, I don't need them. These ones. Wait,
Go
2.6.
and take it off.
Yeah, I want to take it up. 2.6. Yeah, I don't need 2.6. I don't need 1.6 either. Yes, but I need 1. No, something is missing. Yeah, I think that's the way it's supposed to be. Same level based on mark scale. Okay. Yeah, okay. Oh, ici, là. Ici, les salles, c'est ici en bas qui vont aussi retirer.
Non, tu n'as pas off ici, non. Check ça, le 4 virgule truc là et le 3 virgule truc là. Oui, c'est good maintenant.
Now, this is my Fibonacci, right?
Hmm.
No, one thing is lacking. One thing is lacking. I need one more thing. Yeah, one more thing. Lower than this, lower than 6. The one is too far, too close, too close, too close, too far, too close. Exactly. And no, no, not too far, too far. Yeah, I think this one will be sharp. 2, 3. Okay. Don't mind me.
Confusing sometimes. That's why I said you should keep a template.
What?
I say confusing sometimes.
Yeah. So, okay. This is our Fibonacci, right?
Yeah.
Now I've taken the high and the low of this weekly bullish order block, right?
Mm-hmm.
Now look at this gray line here. That is 50% of this Fibonacci is 50% of is 50% of that our bullish of that our weekly bullish order block. So we will be trading based off of this 50% area. Now, if you missed this movement, go running above, right? You don't chase the market because you can set a buy limit here on 50% of that weekly bullish order block. So that let me take a horizontal line and put on this 50% here and extend it here so you see. So that will move the Fibonacci. Let's color it with another color and size is too big, small. Now I can remove this Fibonacci because we don't need it anymore. We've already drawn 50% of our Chihuahua Medano.
Mm-hmm.
Now look at how the 50%, look at this week, how the market sip into this area. Boom. As the market sip into this area, boom, we just rejected above rapidly. Why? Because the market is on the weekly bullish order block. Now, this daily order block here, you could have still be able to trade this daily order block here because if you go on a 4-hour time frame, you see some buy opportunities here. That's the reason why sometimes we do top-down analysis, but we refine to the lower time frame to look for setup so that we should not miss a trade and we can hold and capitalize when it's doing some kind of movement. Let's go to the 4-hour time frame. Now, this is the 4-hour time frame. This is still that area. The 4-hour time frame, the market
It's lower than that.
is lower than this, right?
Mm.
Okay, yeah. Now, this is the 4-hour time frame. The 4-hour time frame, what did the market do? But came back. Look at this 4-hour candlestick. It slipped into this 4-hour bullish order block and boom. As it went, it never came back, right? Now
Mm.
we are on this is the remember this range is the monthly, it's the weekly order block. When the market left this weekly order block, after some days, look at what it came back on this 4-hour bullish order block and boom,